My name is Mieke. I'm from University in Belgium. I'm a visiting scholar for the moment at Rutgers Business School. So I wanted to thank Miklos for this, but he just disappeared. Okay, we're going to listen to, I think it will be a nice presentation of Professor Nigrini of the College of New Jersey, and it's titled The Use of Descriptive Statistics as an Analytical Procedure for the Continuous Monitoring of Multi-Period Data.
Thank you very much. It's nice to see all our foreign guests here, and I'm hoping that in 10 years' time we would have made great strides, but I think what our foreign guests would notice is that we're not going to change the metric system. We still want to calculate how many bushels there are in a hectare. But in fact, we are working on our education, and I think we'll also have a new quiz show in America in 10 years' time. It'll be called, Are You Smarter Than a Sixth Grader? You have to be here to actually know the irony. So here we go. If we move ahead, this is what I would call the equivalent of the US Constitution in continuous monitoring. And what it says is that we have alarms, and these alarms will get generated in certain circumstances, and the alarms will get more severe as the conditions require. And our US Constitution gives us some examples of certain alarms as they will occur. This is something from UBS in Hong Kong, and this is exactly a set of alerts that they talk about, and either it's going to be called alerts or alarms, but something's going to be raised when strange things happen. But the research question for today is, what happens if we have a number of transactions which by themselves don't form an alarm? They're not big enough to raise our alert, or we haven't foreseen this as being an alarm, so there is no alarm raised. So this is my work, this is what I do, this is what we call a bit of pontification here. Well, how did I pontificate? I had a look at some of the statistics books, and this isn't a very wide book, that's just the top of the cover of the book. And I didn't have to open the book too far. Chapter 1 and Chapter 2 spoke about descriptive statistics. I thought, so we have these situations where an alert or an alarm might not be raised. We have this in statistics books, and rather amazingly, if you actually read the books, not once do they actually say descriptive statistics can be extremely useful. For example, Coca-Cola has used it here, and they got a big payback from using descriptive statistics. They just tell you that these are descriptive statistics and you have to learn them. This book was very nice. It only has 2 chapters of descriptive statistics. Other books have 3 chapters. So my research question is, can these descriptive statistics help us in a continuous monitoring environment? And I'm interested in the situation where the anomaly is not big enough to raise an alarm or alert, or maybe there are quite a few of them, and we just haven't realized that they've arrived. What you might say, these errors don't really happen. Well, let's have a look. Kenneth Steen of Chattanooga, Tennessee, was expecting a tax refund. Instead, he got a letter from the IRS saying that he owes them, that's the Internal Revenue Service, $300 million and $7.57. It's mind-boggling. If you read a bit further, it says 3,000 other people got similar notices. The IRS is lucky for a few things. Number one, they are lucky that it wasn't a tax refund. I ask you, taxpayer Bob lives in New Jersey. On Friday, he gets a US Treasury check for $300 million. Where does he live on Saturday? The answer is not New Jersey. He's gone. 3,000 other taxpayers. But what is rather amazing about this, if you multiply 300 million by 3,000, you get a number equal to 10% of the gross domestic product of the United States of America. And you would think that if you made an error equal to 10% of the gross domestic product of the United States of America, you'd notice it. Something would pop up saying, 10% of the GDP has just fallen through your books. Maybe some alert should be raised. A little hint coming their way. But no. Let's have a look at another one, a little more serious. Enron. These are the actual statements of Enron. Revenues for 1999, $40 billion. revenue for the year 2000, there it is, well, not quite, $100 billion. Their revenue went from 40 billion to 100 billion. Their growth was equal to Procter & Gamble plus American Airlines. You would think if a company grew, their growth was equal to Procter & Gamble plus American Airlines, something would pop up. A little hint that there's perhaps an error somewhere.
But they spent as much.
Pardon?
They spent as much.
Yes, actually they spent as much. These are the airlines. The airlines make errors from time to time, and these are tickets priced at $40 or tickets priced at half price. These errors do in fact happen. Here's another one. AIG, to make a $3 billion misstatement. For the foreigners, AIG stands for, and it's gone. It's not all that funny, but we'll just move on. Southwest Water Company. This is the last thing that you want to do. A big announcement. Our financial statements for 2005, 6, and 7 can no longer be relied upon, including all the quarterly statements. You'd think that these errors might get picked up along the way. But now you say, hold on, we have the auditors. The auditors can find these errors for us. Not so fast. This is a published paper, and it talks about deficiencies in auditing. And these come from the PCAOB reports. Number 1, for small firms, right at the top, there it is, analytical procedures, the number 1 deficiency. For large firms, well, thank goodness not number 1. Number 3, failure to perform analytical procedures. So, can we rely on the external auditors? No, they're not here today. So the answer is no. So I thought maybe I can just marry these two concepts. We have these descriptive statistics, and we have these errors that occur which might fall below the radar of the alarms. And so, oh, by the way, well, what we have there, this is just further, this is a published paper, so it talks about, number 1, deficiencies in recording the analytical procedures and deficiencies in actually doing them. So this is what I thought. Why don't I see whether these descriptive statistics can actually help us to find out whether things have changed and maybe signal fraud or errors. The first thing I had to do, I just blurred this over here, was I had to choose some subset. Which of these might help me and which of these might not help me? So this is where we are at the moment, and I actually did a bit of a study. The study involved alumni contributions. So what we have is a college, the alumni contribute, and so I thought, let me have a look at the descriptive statistics here, and let me see the data with fraud and see what comes about. So this is what the original data looks like, slightly masked. And let's have a look. Right up top, I have the number of records, and the number of donations increased by 400. I'll try and move quickly through this because we don't have a lesson in statistics at 2:45. The total dollars went up, but the average went down. And so if I look at this data carefully and I look at the descriptive statistics that I've chosen, my average contribution went down, but the difference wasn't really significant. So I have prior period data, I have the current period data. It's slightly different, but nothing too dramatic. The second thing I thought I would look at is a histogram. This is not terribly dramatic, so I had to put it in color. And what we have here is a histogram of the amounts, and we go in blocks of $50, and right at the end, we have all the contributions that are $450 and higher. And no presentation would be complete unless we added a bit of Benford's law to it. And so I have my Benford's law graph, which is the digits of the contributions. Would I expect it to follow Benford's law? No. These are invented numbers. People make up the numbers. So I'm not expecting conformity to Benford's law. But what I am expecting is that the data looks consistent from one year to the next. And indeed, it does. So then I thought, why don't I seed this with some fraud? We'll put some fraud in, we'll inject it, and we see whether our techniques actually pick it up.